Welcome, everybody, to this month's industry update. I'm Jill Cox with Chicago Title. My guests today are Brian Tanner and Carla Blanc. We're going to let Brian and Carla kind of give you a little bit more about their background, but they both are with CAR. They both serve as government affairs directors and have been very busy this year with lots of legislation and changes and different things that are going to be impacting real estate and brokers and how we do business. So we always look forward to this annual update that you have shared with us. So thank you so much, Brian and Carla, for your time. And I will go ahead and turn it over to you. Real quick, if anybody has questions, put those in the Q&A and we'll snag those as we go along. So thanks for joining, and thank you, Brian and Carla, for being here.
Hey, thank you, Jill, and appreciate again sharing maybe some of the misery that we go through from January through May every year. There are some bright spots. We'll touch on some of the bright spots and some good things out there. But again, I feel like we do a little bit of damage control. I've got a slide to share with you about that. For those of you who don't know, I'm Brian Tanner. I'm the Vice President of Public Policy for the Colorado Association of Realtors. I have been in this role for about 2.5 years. Before that, I worked on it really in the K-12 space with the State Education Association for about 8 years, and then I worked on some state employee issues. But I have now, again, this is where I like to kind of start to date myself. I have been in the political space working professionally for a quarter of a century. So I've got 25 years from the turn of the century to 2025, 15 years as a lobbyist in Colorado. Before that, it's been like in Wisconsin, Massachusetts, and Oregon. Maybe I'm just a glutton for punishment because Colorado makes things much more complicated than other states, for better and for worse. But again, that's me in a nutshell in terms of space. I have a co-presenter today, which I'm excited to share, is Carla, who is the newest member to our team. As I joined the state association during the middle of session, we thought it would be best that Carla also come on board after session has started and the trial by fire has begun. So super excited to have her on our team. I will show you a slide here again that gives you the full government affairs team at CAR. But Carla, do you want to share some of where you came from before you joined our team here at CAR?
Sure, Brian. Thanks, Joe, for allowing us to be here today. Again, as Brian shared, my name's Carla. I joined the team at CAR a couple months back. Prior to that, I came from the governor's office. I've actually lobbied for him in higher education, as my background is mainly in education. And then before that, I was actually with the Senate president for a few years, worked with the caucus at the Capitol, the Black Caucus in particular. So got to work on a variety of bills with a variety of personalities, and everything from criminal justice to education to business. And really excited to be in this particular industry and learning from you all. So excited for this conversation. Thanks for the time.
Thank you. I'm going to start sharing a screen. So I'm going to show, uh-oh. Jill, it's not allowing me to share my slide deck. Oh, there we go. Jill, Carla, can I get a thumbs up? Can everyone see slide number 1? All right. Okay, so again, you mentioned we have a great government affairs team, and I want to just share that, politics is a team sport, and we've got a great government affairs team at CAR. So Jesse Zamora, who some of you may have seen in past, he's actually, I think, our most seasoned government affairs staff person with going on 5 years here. And then Janet Marlowe. So Janet Marlowe is our Vice President of Government Affairs. She's also a member of the South Metro Denver Realtors Association. You all should know this. Jesse, Carla, and myself, we are not practitioners. So we're not realtors. We don't hold a license out there. Janet does. But again, we bring that expertise from a political space in terms of taking the professional and practitioner experience and how to relate that to public policy. So that's, I think, a really important starting point as to what we do. Now, I'm going to give you kind of an overview of what we're going to cover. And again, as Jill mentioned, for those of you who came on, feel free at any time to write in the chat a question that you may have, and we'll have some spots there as well. But we're going to start off with political composition, like who's making decisions at the state level that impacts all the work that we do. And I would ask anyone in the housing or real estate space, name something that isn't touched by either state laws or regulatory policies. And if you and again, you shouldn't, because I think every single thing we do has either a DORA, regulation, rule, policy, division of real estate, or state law that touches it. So whether people like it or not, politics is definitely impacts the businesses that we conduct out there. So we're going to talk about political competition. We're going to talk about political math, especially folks in title. Again, numbers, this is where we get into kind of like the numbers mean a lot, and the political reality of math out there. And then we will get into some policy pieces for 2025 and things that could impact the housing sphere and the real estate industry as a whole. So I'm going to move on to the next piece here. You mentioned I've got a quarter of a century in politics. Well, it started out actually as what it's like these days is like fighting fires. For the 3 sessions I've been with the State Realtors Association, there's a lot of firefighting. People have good intentions, good ideas, but in terms of actual practice and how it impacts everyday transactions, maybe not so clean and so clear. So it brings me back to my firefighting days where, again, we had a fire order that essentially said, stay alert, keep calm, think clearly, act decisively. It applied for, basically using a Pulaski and a shovel to put out a fire. It applies to our work in politics on a daily basis. Okay, so let's get right into the numbers here. So political competition, like who are we working with out there? So again, 2024 was a major election year, not just at the top of the ticket, but all the way down to state legislative races out there. So in the House, you've got 43 Democrats and 22 Republicans. It's the same number as the past cycle. However, I will say it's a different makeup. So there are different Democrats and different Republicans within these numbers. And I will say we worked hard during the primary season to actually help elect some better pro-housing, pro-business Democrats within the caucus to change some of the rhetoric and change some of the bills and legislation that we're seeing. In the Senate, also actually in the House, Republicans picked up some seats. So there was a supermajority. It is now 1 seat short of a supermajority in the House. I think there were 3 seats that flipped there. In the Senate, you've got 23 Democrats, 12 Republicans. Both chambers are 1 seat short of a supermajority. As to folks as to why should we care, if you have a supermajority, you can refer constitutional measures to the ballot. As it stands right now, there are 2 referred measures that we'll see on the ballot for 2025 around healthy school meals for all around K-12. But again, those can only be state law changes. They can't change the Constitution. That's the power that, because you need 2/3 in terms of that constitutional referred measure. Really important to note here. So as I show people these numbers, based upon voter registration, about half the state's going to be meh, and about a little under a quarter is going to be like they hate these numbers, and a little more than a quarter is going to be, or a little less than a quarter is going to hate these numbers. A little more than a quarter is going to love these numbers out there. And that's because as a state, 50% of registered voters are unaffiliated these days. So let that sink in. 50% are independent or unaffiliated. They're not tied to a party out there. Now, that said, there's leans within those pieces out there. But we used to be a third, and now it's essentially a quarter and a half in terms of our political composition as an electorate when we start voting to elect these people in office out there. Political math. Again, if you want to use the chat, if you know these numbers as to what they signify, feel free to share. But this is really kind of driving political strategy. So it's not always what's on paper, the policy. You can have the best policy in the world, but if you can't start counting to these numbers, it means nothing. So I will share and break the suspense as to what 33, 18, and 1 mean. The House of Representatives at the state legislature has 65 members. In order to get something passed, you need at least 33 of that 65 to get a bill out or to kill a bill. In the Senate, you've got 35 state senators. That means you need 18. You got to count to at least 18 to get something passed or to kill it in the chamber. And as some of us have probably read in the newspaper, the governor wielded a veto pen on a whole host of bills in the last couple of weeks out there. But again, that one is the governor's office. Again, he can sign a bill into law or he can veto it, and then we start over. We'll get into the micro, but again, this is super important in terms of how we operate. as an association is, again, if we can't count to these numbers, whether it's a bill we like or a bill we don't like, then we've got to change our strategy out there. Because that's the piece. So again, whatever's on paper, if it's going to pass, if there's a harmful policy to the housing sector, but it has the votes to pass in both chambers and the governor's office is not going to touch it, we have to act. And Carla's actually going to talk about in a position, what we call amend, or changing a bill. Everybody knows what it means to support a bill or to oppose a bill, but a very powerful position for us in terms of keeping us kind of at the table is the amend, which again, Carla will touch on more there. This is our political reality. So as people are like, could, woulda, should have, we have to work with these numbers. So it's one of the things that it's very easy actually in our line of work. Whoever gets elected, those are the people that we work with. We've got to figure out pathways to get to 33, 18, and 1. For those of you keeping score at home, if you're just doing that, like how do I get to 33 if there's like a Republican bill? Well, you need 11 Democrats to break with their caucus to join all the Republicans to get to 33. You need 6 Democrats to break with their caucus to get to Republicans. And please don't forget, I opened up about politics as a team sport. That is absolutely true. I'm going to share with you just one committee. There are several, but again, at the micro level, right, in terms of how this political math plays out. So this is a primary committee that saw a lot of our housing bills out there, transportation, housing, local government. I will not quiz you on all of the members of this committee. Just know that it's 9 and 4, 9 Democrats, 4 Republicans. And again, knowing the math to get to 7, which is the majority, that would mean 3 Democrats would have to join all Republicans to, again, amend or change a bill that's not friendly to the sponsors. So if a bill has a Democratic sponsor on it, this is why we use that amend, and we've had more success working with bill sponsors on the Democratic side versus trying to do a hostile amendment or try to kill a bill, because it's very rare and very hard to pull off 3 Democrats to join Republicans on a bill because they have their own bills and their own priorities out there. So that's House. And again, you can just see the numbers there in terms of how we need to look at and operate if we can't count to 7 at the committee level out there. Senate's much closer. Again, this is one of the primary committees on the Senate side. You only need 1 Democrat to break with their caucus to join Republicans on that. And we have done this before. Again, we'll talk about political capital. This is something where on very key bills, we've actually had at least 1 Democrat break with the caucus and join Republicans to kill bills in committee. And I will share an example of one. Actually, it's a floor vote, but we actually were able to kill a couple of key bills that we've been fighting, I think, for years. And I see Damian has joined us. Damian will have flashbacks. Scott was with us about the one bill that we killed this year because we could count to 18 plus, which we'll touch on here in a little bit. But
yeah, sorry, apologize for me being late, Brian.
All good, all good. Again, I took up a lot of your time January through May during session and asking you, again, Damian is our representative to the Colorado Bar Association, the Real Estate Council section. So we had a lot of bills that we were trying to get input in from the bar. And Damian, thank you for working with some great folks to give us feedback on how to make some terrible, no good, very bad bills better, not as bad. So definitely appreciate that.
Yeah, no problem.
Well, hey, I'm going to kick things over to Carla now. Carla, I think you can give us kind of like what the session was like in a nutshell.
Yeah, thanks, Brian. So yeah, as Brian shared, we kind of tracked bills throughout session. This session, there were about 732 bills that were introduced. Typically, each legislator, there's 100 of us or 100 of them in the Capitol. They get 5 bills, but they also get an assortment of late bills that they can request from leadership. So with all of that happening, there were about 732 bills that were introduced this session, and CAR itself tracked 84 bills. Legislation like those that Brian and I will dig into a little bit later affect us as realtors and, of course, the industry statewide. So we discuss those bills and we call them proposals sometimes and take official positions on them in CAR's Legislative Policy Committee, or LPC. Because of the political composition that Brian talked about a little bit earlier, CAR took an amend position actually on many of these bills. I believe nearly 20 bills we took an amend position on. And oftentimes people will see the title of the bill or they'll read an excerpt of the bill and they're like, why the heck would you take an amend position and not jump out into an oppose outright? Especially when they, again, largely disagree with the bill or struggle to support it. But for us, an amend is really strategic. For starters, an amend position really just is a signal of our efforts to work on the bill and get it to a place that we can at least support, or at the very least removes provisions that we find to be harmful to us as realtors or the industry at large. And the added advantage in being in an amend position is that it just gives kind of a good faith effort. It's a political strategy really to show that you're willing to work with the sponsor, you're open to discussions, and that you want to keep that seat at the table to have the conversations about what will help make the bill as least harmful as possible, or again, get it to a place where you can support it. And in that process, as I said, we discussed 84 bills through LPC, but overall, the prevailing themes for this session that we saw with some of those bills were around, beyond a budgetary shortfall that the state really faced this session. We saw a lot of bills in the wildfire space. There were a lot in insurance, efforts to create housing supply, and a number of different ideas, especially around starter homes and condos that we'll talk a little bit about later today, and then a lot of bills in the tenant and landlord space. Next slide, please, Brian. This is CAR's bill sheet. As I noted earlier, CAR's LPC takes up proposed legislation, and we take a position on them. And so in the bill sheet, you'll be able to find each of the bills and particular updates about where they are in the legislative process, and most importantly, our position. It's helpful to note, though, that the position that you currently see, if you go to the link that's on your slide here, it doesn't necessarily indicate the position that CAR has been in the entire time that the bill is in play. So oftentimes it's an indicator of where we've landed after significant stakeholder work, discussions with sponsors and proponents, lots and lots of amendments, and really just all of the things that go into the sausage making of a bill. So that is basically where you'll see what we have landed. Slide, Brian. Next slide, please, Brian. Oh, there we go. And I'll kick it back to you for conversation on 1272.
Okay, we'll get into it. And again, Carly just sort of hinted on it. It's really important to note that the state budget, again, that's the one job, the one requirement to be elected official in the General Assembly is you've got to pass a balanced budget. So that required about $1.2 billion in terms of cuts, or there's some funky accounting. So just know that there's some accounting stuff where some of these cuts, there might have to be real cuts next year based upon some of the forecast out there. But again, on paper, it's a balanced budget that had to cut $1.2 billion in spending. So what this means for an industry is, like, as we talk, and we'll get into some of these actual bills, but incentives, financial incentives, you are not seeing them. There used to be a first-time home buyer savings account interest deduction out there that no longer exists. Definitely scaling back financial incentives, which is where we get into bills and legislation around, rather than encouraging new housing stock, we're going to look at like regulating the current housing stock over and over again, because that doesn't carry a price tag, which technically we call a fiscal note. So if it doesn't affect money in state finances, this is where we see a lot of bills, which are some on your screen, that are at the local level or don't have a price tag. It's a policy change out there. And it's actually makes it more challenging for us is when there isn't money for people to spend on fun new programs, they go after well, we'll just change in terms of how housing is regulated in the policies out there. I'm going to start. So I mentioned we do a lot of damage control. Hey, the first bill out of the gate there is a bill that we championed, and it's been around for a couple years. So I'm going to give props to the home builders and some other folks. House Bill 1272 about construction defects in middle market housing. This comes from the standpoint, again, if you're looking at the market right now, again, there's a lot of inventory. So again, as we keep hearing about a buyer's market out there, inventory, there's a lot of uncertainty in terms of what the feds are doing around tariffs, no tariffs, and about some jobs. So there's uncertainty, but there's a lot of inventory right now. However, that's, again, current sort of housing stock where you've got essentially sellers looking for buyers out there, and buyers are looking at interest rates, and it's still an uncertain time. Having just been in DC with NAR, we're not seeing mortgage rates that are going to be dropping nearly as fast as we want them to. We keep hearing about the Fed probably in September, maybe looking at some rate cuts out there. We don't know. It's a crystal ball sort of vision. But the first bill that you see here is about entry-level housing and the fact that it is tough. We saw a stat from the Federal Reserve that a property owner, homeowner, in terms of their net median worth is $430,000. For a renter, it's $10,000 is what a renter in terms of their median worth is up there. So we've got to find a way to get entry level. And again, condominiums historically have been a good entry point in terms of home ownership. So this bill was really to find a way to incentivize builders and developers to look at what we call middle market, really $250,000 to $600,000 in terms of building condominiums with some additional protections. It is a voluntary program, so I'm not going to lie and say this is going to solve all of our ills around entry-level housing options for people to get into home ownership. But for builders that want to go through this, there's additional sort of protections in place. So I'm not going to get into the whole list here because we'll cover a few more bills. But just know that it raises the threshold for suing a builder or developer. Right now, again, we see there's still construction going on all over the metro, all over the state, you name it. There is multifamily construction, but those are almost all rentals. In terms of the ratio, we're at 14 rental units in a multifamily housing that are being essentially built for every for sale condo. 14. 15, 20 years ago, that was 2 to 1. So you can see how the market has shifted. There's, again, a lot of rental units. We probably have read articles about there's a glut of like new apartments for rent out there, but there's not for sale condos. And so this is the piece that we're working to grapple and trying to find ways to get that. And again, the whole piece is around getting sued. So you've got HOAs who are volunteers, they're homeowners coming together. You've got attorneys that basically pursue them and be like, hey, something's not to code in terms of the condominiums here. Let's go sue. And then now you've got additional costs for like essentially insurance and risk based upon those condominiums out there. Our goal is to figure out a way to hopefully crack this nut a little bit to see some developers that are looking to try this program out there. But again, it's something that we championed and we worked with a whole host of groups. I will say this, I don't know if anybody actually loved this bill, which again, you've got people from both sides. You've got the trial bar, you've got home builders. When not everybody likes a bill, it might actually be a pretty good bill, which means it's kind of in the middle. So I will say that on House Bill 1272. But again, it's something that we're committed to as an industry. Like we've got to find pathways for home ownership. And House Bill 1272 will hopefully, again, incentivize and spur builders and developers to start building for sale condominiums that are not more than $1 million. So that's the intent. I will kick it over to Carla for some additional bills, and I'll get back as well.
Thanks, Brian. Yeah, we'll go over House Bill 1182. This is risk model use in property insurance policies. This is a bill that actually sought to incentivize wildfire risk mitigation by providing homeowners with basically discounts for their mitigation efforts on their properties, and mainly greater transparency and understanding around the rationale that insurers take when insuring their properties. So it does so by doing a couple of things. First, it requires the insurers to basically provide a written notice either at the time of the application, renewal, or even non-renewal that gives you very plain language about the wildfire risk score that they've given you and the model that they use to determine that score. They also have to give you a range of possible scores that you could be assigned based on your mitigation efforts or their lack of, and the risks associated with those. I think the biggest key thing there too for folks is that it would require insurers to post on their website premium savings that are available to policyholders who undertake certain mitigation efforts, either at their property level or at the community level. And then also they need to post a process for appealing a score if they feel like there's some sort of conflict between what they've received and what they think they've done to address the wildfire risk on their properties. The bill was actually signed last month, but it takes effect later next year. It's going to be July of 2026 where we're actually going to see the bill take effect. And we're excited to support this bill. We supported it at its inception. It's a really one-of-a-kind policy that we think will both drive behavioral changes in terms of encouraging mitigation efforts, but also we hope that it'll change this pattern that we've seen and heard a lot of, where even the most significant mitigation efforts that someone does on their property could still result in declined or canceled insurance policies without really definition or clarity around why 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 that's happening. So we're really excited to see some changes with that and hope that it's the first of many steps in terms of greater transparency and access to insurance policies for folks in Colorado. House Bill 1302, a little bit different there. This is a bill that sought to create two state enterprises in our state of mini enterprises. This would be one that would be shored up by DORA. And the first of those two enterprises would essentially be the strengthened Colorado Homes Enterprise. It would collect a prospective fee of 0.5% of premiums from certain insurers, including those in the FAIR Plan, which many of you have probably heard has officially started up in April of this year now. And the goal of this enterprise would be to award grants to homeowners who make certain improvements to their roofs to make sure that they're more resilient and resist property damage from common issues like wildfire, hail, and things like that. The second would be a wildfire catastrophe reinsurance enterprise, and that would be funded through revenue and catastrophe bonds with the ability to assess the industry as a security for those bonds. So this one was, I think, a little bit more prickly for industry. This bill actually did not pass. It died in the final days of session. I think there was a lot of pushback from industry on the bill. They had some concerns about how this might work for them, again, particularly around that second enterprise. And they had concerns about pieces of the language that really dug into loss ratios. We were in an amend position ourselves at CAR when we discussed this in our LPC. And this was, again, largely a reflection of our position that, an increased fee on insurers would likely mean an increased fee on homeowners in some form or fashion. And we really wanted to be protective of a space that is fragile and that, some policies can tend to encourage insurers to push themselves out of the state or just push out of the state altogether. So yeah, I'll pass it back to you there for an update on 1009, Brian.
So House Bill 1009 is another one that we were in the amend position on, and this is around, essentially it's a voluntary program that fire districts can enact locally, where they can fine private property owners based upon dead fuel on their property. That's within a certain zone based upon the international sort of wildfire standards out there. So this is something that, again, knowing that you're asking now private property owners to like either mitigate like out of pocket, all of these costs are out of pocket. So we made a number of changes to this. The first one out of the gate that was startling for us is, could fire districts actually foreclose on these fines? Could they now actually take over property based upon if they haven't mitigated dead vegetative fuel on the property? So we made a number of changes to this, but again, we understand the need. There's about 3.5 million Coloradans that live in what's known as the wildland urban interface. We need private insurers in our state to secure financing to actually, if something does happen, to rebuild and replace properties out there. So we try to do that delicate dance of like making sure that things are tied into insurance and also are not completely punitive to property owners. So we worked on a whole host of things around 1009 to make this bill better. And again, it's a voluntary program that not every fire district may choose to do, but now there's certain notices to go out to local folks. So that's 1009. 1093, again, we've got local communities across our state that become very creative in terms of how they want to shut down development and growth. This basically expands the definition as to what's prohibited from local governments enacting or enforcing around anti-growth policies, also around conditional use. Some of you may have read about Lakewood recently. Lakewood has gone back and forth on some pieces, and it kind of spurs in terms of changing that use out there. The next one is House Bill 1219, requirements for better understanding metro districts. And again, metro districts is a hot topic for many in terms of transparency. So this bill provides more information to, again, prospective buyers and to communities in terms of metropolitan districts and the services they provide, or just in terms of contacts, like who do you contact if you have questions around your metro districts. There was a provision in here that created another handout, or basically a document that, again, realtors or real estate agents or licensees would have to hand over. And again, for all of those in the industry, there's a number of documents that are already required in terms of handing stuff over. The contract to buy and sell alone is many, many more pages than what it was a few years ago. Current law right now allows to share a link. Again, you can share a link to get this information. We fought for an amendment to make it the same sort of thing, the continuation of current law, where again, you just have to provide a URL address to go and get this information, not have another standalone document. The last one in my bucket here is Senate Bill 157. This is the one that I was hinting at with Damian earlier. our legal team. So again, the bill title probably sounds great. Deceptive trade practice, significant impact standard out there. But what this bill actually does, it allows a single transaction to turn into a Colorado Consumer Protection Act claim, which means it's very, very financially lucrative for attorneys and trial attorneys to like go and find one case and say, well, that one case could impact the larger public. And there's no threshold, but it lowered the bar. Right now, there's a public, you have to have multiple people involved in order to have a threshold for this CCPA Protection Act claim out there. Again, this lowered it to one, which is incredibly, like, again, you all know this. Real estate transactions are incredibly complex. There are multiple partners, there's multiple things going on. And so where, again, if there's a miscommunication, there's some pieces out there that is a gray area within this bill, it would expose people to a Protection Act claim, which again, errors and omission, E&O insurance does not cover because it's considered a deceptive or unfair trade practice. This is a bill that we were able to count to 18 plus in the Senate. So it got out of committee in the Senate because we knew the numbers. It was going to pass 4-3 on a party line vote. But we were able to pull a number of Democrats to join Republicans to kill this bill. And so
I'd like to point out to everybody, this is the second time that you guys have been able to kill this bill. This thing is an absolute disaster that they've tried to run. And I don't know if they'll try it again next year. My guess is they probably will. Carla and Brian are like, oh my God, we already know. But guys, and it doesn't just affect real estate and real estate brokers with E&O insurance. It's doctors, it's lawyers, it's any profession, accountants, any profession you can think of. All of a sudden, the plaintiff's bar has this hammer of, if we win, we get attorney fees and costs and we get punitive damages. And by the way, you may not have E&O insurance. It is mind-numbing that they think this is good for anything in Colorado. But if that's a significant win, that's a significant win 2 years in a row.
Hopefully, again, we'll probably have a lot of deja vu next year, Damian, on some of these issues. But I am going to turn it over to Carla because, again, one of the buckets was around the tenant landlord space. We've got a couple of bills that Carla, I think, is going to cover as much as she can, given, we don't have 6 hours together.
Yeah, absolutely. Thanks, Brian. House Bill 1168 was a pretty big bill. I think this bill was almost 30 pages. Quick background on this bill: essentially, existing state law here in Colorado from, I think, back in 2017, there was a bipartisan effort to write a bill that essentially allowed tenants to terminate their lease early with a 1 month max penalty if they were an individual who experienced abuse. This is abuse that they would give notice to their landlord about through a protection order, police report, or medical record. And the key provision of that policy was that they would have left the property again. So I think really important piece to remember there is that they identified that they experienced abuse through one of these pieces of documentation, and then they would leave that property with a 1 month max penalty. Federal law has something similar. It's VAWA, the Violence Against Women Act. And this really just protects from discrimination in housing and eviction solely on the basis of being victim. And you would, again, give notice of your status as a victim through particular pieces of documentation that the landlord could request. So they could request any number of, those pieces of documentation that we talked about earlier, the police report, the protection order, things like that. The proponents of this bill borrowed bits and pieces of those two policies and created something very unique here in Colorado that essentially states that a tenant who has experienced abuse, so we're talking about sexual abuse, domestic violence, even stalking, a tenant who states that they have experienced these abuses are not guilty of unlawful detention of property, even including for non-payment of rent, if they cite the abuse as a cause for these for their delay in paying rent. Instead, this would trigger a requirement for the landlord to provide and enter into a mandatory payment plan with that tenant anytime they self-attest to have experiencing the abuse. So as you heard earlier with those two previous examples, there are particular types of documentation that you would provide to establish that you are a victim. In this particular policy, you simply have to give a self-attestation to your landlord to establish that status. The policy also doesn't necessarily limit how many payment plans you might want to enter. So if you're being abused, you start a payment plan, and then you have your abuser start stalking you 6 months into your payment plan, you might ask your landlord to give you another payment plan. So we really did a lot of work to talk to the proponents about why this might be well-intentioned, but could present problems for folks in this particular industry with just this indeterminate timeline of how long these two are locked together. It's again a 30-page bill, so I won't get into too much more of it, but I will say that it creates a number of other changes and mandates around a writ, returns of security deposits. It updates demands and notices for landlords, and it just really does a lot in this particular ecosystem. So I think it's one that folks who are in this ecosystem should really pay attention to. They should definitely talk to the folks who they're getting legal advice from, and I think they should really pay attention to it, mostly because unlike a lot of the other bills that we talked about today or talk about, it goes into effect August of this year. So a lot sooner of a timeline than we might normally see. Next is House Bill 1240. This is actually one of two bills that the legislature worked on for individuals who are receiving partial or full housing vouchers. Again, some quick background on this. As you all know, the CARES Act was passed, I think, in 2020, and it provided a number of types of relief during COVID, from support for like large corporations to PPP loans. I think it was part of COVID checks. And of course, the piece that this bill focuses on was around eviction protections. The protections in that particular act were around two pieces. I think the eviction moratorium, which expired, but there was also language in that that stated that it would require a 30-day notice for eviction, and that notice was actually upheld in Colorado Supreme Court. So while the eviction moratorium expired, this particular piece about requiring a 30-day eviction notice did not. And so this bill, House Bill 1240, sought to codify that here at the state level. It also encourages, but does not require, again, because we're in a time where we don't have a lot of money. And if you require state agencies to do anything, they will give you a fiscal note to tell you how much it costs them. So it encourages, but does not require the Department of Local Affairs to create a website that would allow landlords to determine if they are a covered property in this instance. The bill was actually signed late last month, and I believe it already went into effect. So again, I think similar to 1168, something that folks who are in this particular ecosystem should really pay attention to. So
Thank
back to you,
you.
Ryan.
Again, we probably could have filled up the multiple slides with stuff in the tenant landlord space. The one thing that we've been stressing with all of our realtors and members out there, if you've got essentially people looking to hold onto a property and turn it into a rental, there has been significant changes for people acting as a housing provider or a landlord. And we just encourage folks to come at that with their eyes wide open. So just in the last 3 years, you've got things around cause for eviction, around there's no such thing as a non-renewal anymore. You've got warranty of habitability changes as well. So that's the biggest thing we've been stressing with our membership, is that if you have people who are looking to hold onto a property or even have investment properties as a rental unit, please come at it with your eyes wide open and make sure that you have good legal counsel to advise you on so many different moving parts, especially with the things that Carla just shared that are still coming online. So that's a big piece. I'm going to go off script here. I'm going to give one more bill that I think we worked very closely with the Title Association and the Bankers Association. It died. So before people freak out about this bill, I'm going to cover here. It's called House Bill 1268. It's essentially called the Utility On-Bill Payment Program. So again, the intent is for Excel or Fort Collins or for utility companies to allow some of their consumers to actually essentially take out sort of equity to do energy efficiency upgrades. So a whole host of things, and then attach it to the meter. That's the whole thing. It's like, hey, like, it's not really a loan. We're going to finance something up to $50,000 for energy efficiency upgrades, and it will be attached to Excel. It'll be attached to the meter out there. Let me just read a couple things when this bill got introduced. It's actually, again, this is where we talk about, like, really? Like, we understand the intent. So we're talking about essentially up to $50,000 being attached to a meter, which in the bill, they're like, well, hey, but just know that this financial responsibility cannot be recorded as a lien against real property, and it does not create any encumbrance regarding the real property other than what's said here. $50,000, if you don't pay this additional, again, up to 10-year additional fee for this meter, you lose your electricity, right? That's the thing. And you can't really just take out insulation or rip out windows. It's not like solar panels. You're kind of locked in to when some of these energy efficiency upgrades out there. So however, okay, it says this, right? It's not an encumbrance. It can't be recorded as lien. But guess what? In terms of an actual documentation signed by a prospective buyer, making them aware, they include a title agent. They're like, in terms of the paperwork, you need the name and contact information for the title agent or company that provides closing and settlement services in relation to the real estate transaction. If there's not a lien on a property, there's not a notice, there's not an encumbrance, how are you supposed to even know what's happening with Excel over here for a $10,000 energy upgrade? And again, this is a separate document. So the piece that we work to close is like, we have a process in place in terms of title. So again, this is a process that is known and utilized. So again, put a lien. If it's a loan to an individual to take out money, put a lien on the property. The thing where we got into the on-bill piece and we sort of compromised was like, well, if it's not a lien, is you really truly want to attach it to meter, you at least got to put a notice. So again, as you were going through a title search, somebody knows. Again, you've got a prospective buyer that is knowing there is this thing attached to the utility bill that could be hundreds of dollars on top of their utility cost out there. And the Bankers Association helped as well, being like, look, $25,000 is $25,000. Like, it changes in terms of the underwriting for a mortgage. That's a significant chunk of change, and people are already looking to max out what they're approved for. And now you're adding on another $25,000, or they won't have electricity. They can't pay it. This bill died. So again, for a whole host of reasons, and again, for those of us that have Excel already does this for some of their electric vehicle programs. So it's something that the state and the energy office was looking to make statewide. It went away, but it's something that you should be aware of, because like, oh, we'll just throw in title agents. We'll just have you a part of the process here, even though it's not recordable on a property. All right, moving along. Just real quickly, one of the biggest issues for us, so I mentioned our one party about the condo creation and the construction litigation reform. We still have an issue. Again, artificial intelligence is a huge piece out there. A lot of our realtors and folks out there use identity apps, verification applications to make sure that, again, you know who you're meeting with. You're showing a property in rural Gunnison County. So it's a safety feature, but we got caught up in the bill last year. That's a huge hot mess of a bill around Senate Bill 205, and we're still working to fix it. So that's the big nutshell. Again, there was a bill that was introduced very, very late in May, the final days of session, that had language in there that was actually would have protected realtors and actually any real estate professional that uses an identity verification or fraud app for showing a property. So it died. Basically, it's died on the final days, and there's, it's something that we're committed to. That I just want to flag for all of you about the work we're doing. So that's, again, it's a snapshot. If any of you have trouble falling asleep at night, pick a bill, any bill, whether it's 4 pages, and there are some bills in that queue that are 53 pages. Feel free to read a bill, and I promise you, you will have no problems falling asleep. So that's just a snapshot of the 84 bills that were on our plate for the session that we just want to lift up. Carla, do you want to talk about what we can do now?
Yeah, I'll keep it quick, as I know we want to make sure there's some time here for folks to ask questions, but this is just a slide that we put together to remind folks about how important it is to keep in touch with your legislators even when session is over. I like to remind folks that for every one legislator in the state of Colorado, there are almost 8 registered lobbyists in the state of Colorado. So we're talking about 800 lobbyists for 100 legislators. When you picture we have only January to May to write bills, you're also picturing all of these lobbyists descending upon the Capitol to uplift the countless niche issues that are happening in their industries, us all being some of those folks. And so I think it's just a really good time, the interim, to really engage with your legislators, keep them talking to you, make sure that they still know that you're a resource to them, especially when they have time to breathe and get away from folks who are swarming them around their chambers to talk about those niche issues. Thank them for the work they've done, thank them for the work they're committing to still doing for you in the coming sessions. Go meet them in district, bring them out to your events and the discussions that you're organizing. And again, just make sure that they know that you're always a resource, especially now that they have some more time to breathe and sit down and dialogue with you a little bit more. Next slide, Brian.
Before I gotta stress this piece or two. You may love your legislators, you may hate them or really dislike them. You should still follow them. Like, all of these people are taking votes on housing and real estate industry issues out there. You should follow them and let them know what you're experiencing in terms of the housing market and the challenges that you are facing. because very few of them are actually living and breathing as practitioners in the space, but they all have ideas on housing. So again, that would be my big stress. Love them or hate them, you should follow them and engage with them, and now is that time.
This is just a quick slide we put together for folks to know how to reach out to us about not just the bills that you saw in this presentation, where we gave you a quick snapshot of what we worked on, but any of the bills that you see on our public bill sheet, especially when you're talking about the statuses that you saw throughout session. And same thing is true for during session too. So feel free to reach out with any questions that come up, or again, drop them in the chat for us to talk about today.
Can I just stress real quick, just and you guys stressed this about reaching out to those legislators, but guys, it is so important to talk to your clients about it too, not just you and having conversations yourself with these legislators, but I really don't feel like the legislature has any real inkling or understanding of what the landlord tenant laws that they have implemented over the last 3 years, what that impact is on the regular, mom and pops that you guys work with on a regular basis. Like Brian talked about before, the one that wants to sell their house or they want to buy another house, but they want to keep their one a rental. These legislators have no idea what that impact is for people that are trying to build wealth or use real estate as an investment vehicle for the average person. What they see is these big corporations, faceless corporations that are hammering these tenants, and they think it's so unfair. And that's how they're voting on this stuff. And so if you can talk to your landlords and your clients and everybody else and encourage them to get involved in the process, that will help our industry, because I really just don't think they have a full picture of what's going on. Anyways, that's my elevator speech, Carla. So sorry.
That's spot on. I appreciate you sharing that.
And we didn't even touch on short-term rentals or vacation rental properties. It's a whole, again, all of these things, lots of ideas. Not all of them are good.
Not many of them are good as far as I'm concerned, but what do I know?
Does anybody have any questions out there? Quiet group.
Well, I just want to say again, thank you for having us. I do always share being like, we don't always bring the best news, but we try to keep it real in terms of the work that we're all facing, and the challenges that are hitting the housing and the real estate industry as a whole. So we try to be real, which means we're not always giving out rainbows and unicorns in what we share, but just know that it's important work, right? So we're doing this day in and day out. We've got a couple of contract lobbyists that are under the dome practically 24 hours a day for 120 days. So I want to give props to Jason and Karen as well, but it's a team sport all the way through, and it's really to make a difference so that all of you can conduct business back home. That's the fundamental thing, is that people can operate and people can be successful and not have to jump through additional hoops in terms of closing a transaction.
Well, and thank you guys for all of your hard work. I mean, I know that the legislative session the last several years has not been easy.
No, I've got a lot more white and gray here. Could say it's my kids, but I blame the 100 folks under the dome for the aging process on an annual basis.
We had a question pop through, and I'll try to summarize it just since it's a kind of a long question, but they're talking about kind of the public perception and the blurred lines between realtor and licensed real estate broker. So they're saying, considering CAR's role in public policy, what specific advocacy or educational initiatives are you pursuing to directly correct this widespread public confusion, ensuring consumers understand that core legal fiduciary duties are consistent across all licensees, regardless of NAR membership claims?
Again, this is partly where obviously we have a three-way agreement with local associations, the state association, and the National Association of Realtors in terms of that brand. And again, that higher bar that comes with being a realtor versus a licensee. The piece that we stress in terms of the work that we do is that anybody can be a licensee, but as an association, Carla mentioned our legislative policy committee. That is 52 realtors from 20 different parts of the state that come together to make these decisions. That's actually what gives us political power, is the realtors coming together as an association statewide. It's why we're the largest professional trade association in the country that make a difference on housing. because an individual licensee who may be, again, absolutely great, does not have the same power as that one person or that one voice that we have as 23,000 realtors in Colorado, or 1.3 million across the nation. So that's the piece where we know it affects, the work that we do carries over, and it affects all licensees. But our whole thing is like, we would like to have you at the table with us, making these decisions and being part of the advocacy, which again, you have that access if you're a realtor. I don't know if that answers the question. That might have been my like elevator pitch. I don't know. That's what we.
No, I think it was pretty good. I mean, at the end of the day, I mean, I think it's important that, it's one thing to have people out there running commercials about what a realtor is, but I think the place that makes the biggest difference is you guys as realtors telling your clients what you and your trade association is doing for property rights in Colorado. Because keep in mind, everything that you just saw is all these things that Carla and Brian have gone through and talked about on these different issues. Um, they affect your clients. It's not just realtors. I mean, they are protecting property rights for the masses, not just realtors or even real estate brokers. So I think a lot of the distinguishing realtor from real estate licensee should probably come at the grassroots when you sit down with your clients and talk about, hey, how you don't want to, how we talked about you renting your house, there's a lot of things that have changed. And while our trade association has done a lot to try and beat back a lot of those rules and laws, and will continue to fight for us, you need to know this is what's changed. But they need to understand that it's your trade association is the one that's out there trying to make a difference and protect their rights.
Well said. Thanks, Damian.
It's a great point. Well, looks like we don't have any other questions. Anything else you guys want to add or share? Or that was wonderful information. Thank you so much. Carla, welcome to the team. Gosh, she's talented, right?
You mean condolences?
Yeah.
Yeah, condolences.
Oh my goodness. Well, hey, look, I will say this. We hit you with a lot of information. Obviously, reach out to Jill, Damian. But if there's things that come out after today, look, we like to be a resource out there. Again, I'll just be clear though, we do not provide legal counsel or advice on specific examples or cases. We can talk about intent of policy on a much larger scale out there. But again, we're always trying to provide good information and at least give background on some things as to why we did what we did.
Wonderful. Well, thank you both so much again. Thank you for all your hard work. Thank you for what you do for our industry. We just appreciate you so much. And thanks for your time today and sharing with us all this great information. So thanks everybody for joining, and we will see you next month on our industry update.
Thanks,
Thanks,
y'all.
everyone.
All right. Thanks
Thank
a
you.
bunch.
Bye.
Bye.